Public Auditor Doris Flores-Brooks says it's time to take a close look at whether or not wholesalers, small contractors, and other exempt businesses should begin paying GRTs like everyone else. GUAM laws, some passed back in the 70s, have made these businesses exempt from paying the gross receipts tax, which has resulted in a loss of nearly $70 million a year for GovGuam and over $210 million over the last 3 years alone.
I know the legislature has been talking about raising taxes, so something to think about is whether or not, before we raise, let's have everybody pay taxes.
A 3-year audit by the Office of Public Accountability has found that GovGuam has lost out on hundreds of millions of tax dollars over at least the last 3 years because of tax exemptions that are afforded to certain businesses.
On average, tax exemptions are, we're having foregone revenues of about $70 million per year based on just from tax exemptions.
This amounts to over $210 million of lost revenue over the last 3 years.
We did identify the top 5, and number 1 by far is the wholesalers because they get 100% exemption. I believe followed by retailers,
off-island sales,
and the Dave Santos, the small business exemption.
Other businesses with GRT exemptions include subcontractors and base operation and support contractors. Rental income and insurance payouts are also exempt. Even alcohol and tobacco sales to the military are exempt.
Wholesale is the lion's share. It makes up nearly almost just under 50% of the total exemptions. And I guess overall, I did not realize how much the government has exempt. $70 million a year is a lot of money that's not being taxed by the government of Guam.
So when and how did wholesalers and these other businesses get these tax exemptions?
For example, the wholesalers, it's been exempted for many years, I think back in the 70s, and it's been growing for many years. So I think that the public auditor looked at the last 3 years, on all these exemptions, and it's pretty big, in other words.
It's time for us to look at and evaluate. This is the role of policy, being the legislature, the administration, whether the rationale for these exemptions 20, 30 years ago, is that rationale still holds today?
Explain it. So what was the rationale when the law was passed to exempt wholesalers from GRT?
As best that I could remember, it was, quote, double taxation. Yeah, because a wholesaler is paying the GRT, and then the retailer will have to absorb that cost in the retail price. So the question to ask: did the people of Guam benefit of lower prices by not taxing wholesalers? Again, that's information that needs to be debated, talked about. I don't know. Most people will say in general they didn't see a drop in prices. Most people that can remember that. And as we can see today, like a loaf of bread is what, $4, $5 compared to what it was 20 years ago.
The OPA says there were a lot of inconsistencies with the information they were provided for years prior to 2013, which had something to do with reconciling data between Rev and Tax and the Department of Administration. So what are the OPA's recommendations?
Our recommendations are basically to kind of resolve those in-house corrections that are needed with the systems, but also to kind of, because we did list some best practices here for the legislature and DRT management to consider them when it comes to reporting the tax exemptions.
And to continue more monitoring, more scrutiny, because they claim they're doing it, but when we ask these, well, what happened here, they couldn't answer the questions. But more monitoring, review of tax exemptions to make sure that that people who claim these exemptions are eligible to claim the exemptions.
The Office of Public Accountability actually tried to do the audit in 2013, but the data at the time was unreliable, so the actual amount of taxes that GovGuam has lost out on over the last few decades is uncertain.